Hey guys, Brian Taylor here with Dreamline Realty. I am with a special guest today, Mr. Stephen Knorr with the Knorr Group of Alcova Mortgage right here in Harrisburg, North Carolina. So wanted to bring Stephen on the channel today and talk a little bit about some mortgage topics. So the first question, Stephen, I have for you is a lot of people think they need to put 20% down on a mortgage. Is that really true, or is that kind of a myth?
It is a myth. So that is not true. It's a question we get asked a lot. In fact, there's programs that require no down payment. The USDA loan is based on property location and an income. It does not require a down payment. You can if you want to. There's certain down payment assistance for first-time home buyers that will give you your down payment. For our veterans out there, no down payment required for the VA loan if you have the eligibility. And then for people that don't fall in those quadrants, you can get in for as little as 3 or 3.5% down. So very affordable options. Matter of fact, with tax return time coming up, you might be able to take your tax return and turn that into a down payment for a property.
So FHA loans have this reputation, at least that I hear about, like they're only geared for first-time home buyers. Is that true, or can anybody get an FHA loan?
Right. So if I looked at the stats, probably more first-time home buyers use FHA, but it is eligible. Anyone is eligible to qualify for that loan. So FHA is a little bit more forgiving to those people that might have had some problematic credit. So they allow for a lower credit score. They have shorter forgiveness periods for people that may have had a foreclosure or a bankruptcy or some major credit incident. So anyone that's eligible can apply for an FHA loan. It is not just for first-time home buyers.
Okay, and then while we're talking about those FHA mortgages, in this market that we're in right now, I know from our side, we're in these multiple offer situations. People are just submitting 30 to 40 offers on a property. Sometimes people will say that those FHA loans aren't as attractive as conventional loans. What do you think about that?
So I guess, it's a matter of someone's opinion versus, one person's opinion, but the FHA loan, the property does have a few requirements that conventional doesn't. So the FHA loan is governed by HUD and they have a certain set of guidelines. The main thing we see is peeling paint on an exterior, maybe a windowsill, a shed, something like that, or rotted wood. The appraiser will actually note on the report that those have to be fixed prior to closing. Where on a conventional offer, that is not the case. So the FHA loan, from a lender standpoint, is actually easier to approve. It's a stronger loan, but sometimes when you get in those bidding wars, people don't look as favorable on that. But from the lender standpoint, they're actually a better loan.
So going back to the FHA loan, is there a minimum credit score that someone needs? I know over the years that has somewhat fluctuated. Sometimes it was down to this 580, then it went up to like 660, I believe. So kind of, what does that look like from a score perspective to get into an FHA?
And this is going to be a different answer per lender, because HUD actually says there is no credit score requirement. You guys figure it out, being the lender. So each lender, based on their risk tolerance, is going to have a different answer. Ours is 620 right now. We used to be as low as 580, but when COVID happened, the secondary market had a credit crunch and everybody tightened up a little bit. So there may be some lenders out there that go below a 620. Most of us are gonna be around that 620 range, and then the higher the score, the lower the rate as far as going up into the 800s.
Okay. So when it comes to people applying for a mortgage, one of the things that I hear all the time is, I don't want my credit report pulled by more than 2 lenders. Because my score is going to drop and I'm not going to be able to qualify. So I think there's a myth out there that does happen. But is there a window of time when someone can have their mortgage pulled many times to shop for that mortgage?
Yes, and this is a conversation I literally have at least 3 or 4 times a day. And I want to start by talking about the Credit Karma apps and the monitoring apps and things like that, because those are very helpful for consumers, but they're also confusing. That Credit Karma score is not your mortgage score. When somebody calls me and says my Credit Karma score is 900, I say, great, that's not even a real score on our system. So your Credit Karma score is always going to be a little bit higher than your true mortgage score. And it's a monitoring service. So real time, when we pull credit, you're going to get an alert that says, alert, your credit's been pulled for a mortgage. You're going to probably see a little bit of a tick down on your monitoring service because it's real time. In our world, they only report once a month. So once a month, you're going to get that update. And when we pull the credit, you have 45 days as a consumer. So when people say, I don't want to get my credit pulled again, well, from the time the first mortgage company pulls it until 45 days, they all go in the same folder under mortgage. They're all listed as inquiries, but they don't individually impact your score. And like I said, on your monitoring service, every time a mortgage company pulls it, you're going to see being a mortgage company, you may see your Credit Karma score go down, but that's not your real score. Your real score is intact, and only once a month do those bureaus talk to all the trade lines and the people that pull the credit. So big myth that's out there. It's one of the things that we have to explain more than anything else in this industry.
Okay, so when someone applies for a mortgage through Okova, they can do that online, and how long does that process typically take?
Yes, we prefer they do it online. It's secure. That way the data comes in from their end, and there's less chance for misspelling or error. It takes them about 10 minutes to get through it. We have a very intuitive, slick software system that tries to actually pull, because when you apply, you type in your information, then it's our job to validate it. That's where the mortgage approval comes from. So when you put in your information, we try to pull your employment and your income verification from databases that exist now thanks to technology, to where we don't have to bug you for your tax returns or your paycheck stubs. And you can now link your bank account securely, so we can hit one button and refresh those. So the lending process is trying to go as paperless and use the technology, especially in this COVID era where people don't want to really transfer documents and or in-person type of thing. So 10 minutes will get you to the application. You'll have to upload a few things, and then we have those pre-approvals knocked out in hours.
That's fantastic. So also, a lot of people will come into our world looking for a house, and they say, well, my score isn't where it needs to be. I know I'm kind of close. Do you have a way to take a look at someone's credit score and say, okay, if you do this, this, and this, we can take you from a 615 to a 660, and it's going to take maybe paying off a couple things? Do you have that type of technology to figure that out?
We sure do, and that's one of the resources that we use every single day, because we're here to help. So that's the first thing I tell people is sometimes there's a little bit of an embarrassing factor with like things that may have happened in the past, but I tell people every day, I've seen the best, I've seen the worst, we're here to help. So your story is your story, and if you want to have an ending where you're in a house, we can make that happen. We have what's called a what if simulator and a wayfinder. Both of those tools, real time, let me go and make changes to your credit report. So if you're at a 580 right now, maybe I go in there in the system and say, let's pay off credit card 1. Let's pay off credit card 2, and let's pay off half of credit card 3. That may get you 40 points real time. You give me the proof that that's happened. 3 to 5 business days, I can have your score with a rapid rescore boosted up, and now we have an approval. So we can truly take somebody who, when we pull the credit, is not approved, and within 3 to 5 business days, get that score up and issue them a pre-approval letter.
That's fantastic. And guys, for you who are watching this that are first-time buyers especially, take advantage of this service, because if you can get your score up just 20, 25 points, you can get yourself into a house versus maybe making that decision to rent. All right, so talking about first-time home buyers, what kind of down payment assistance programs exist out there? I know in the past there were some. I don't know if there still is with COVID and everything. What's going on out there?
Yep. Some programs went away totally. Some programs were put on pause. Some programs changed their guidelines, but there is down payment assistance. So the disclaimer is that you have to qualify for that. The 3 things that we see most common are have to be a first-time home buyer, which the definition is have not owned a house in 3 years, 640 middle credit score, and then the income limits are based on area median incomes and limitations. So North Carolina, the state, has a program. Mecklenburg County has one. Concord has one. There's a lot of different programs. So depending on where you actually want to live, we would look and see what's out there for you. Some of these programs require payments. Some of them require that you live in the house for X amount of years, and then they'll forgive it. So it's a process where we want to make sure it's the right fit, because just because you qualify for down payment assistance, we want to make sure that we find the right one for you. And if you can't qualify for down payment assistance, then we'll talk about, do you qualify for any of the 100% options that are out there in the market.
Okay, yeah, that makes sense. So on mortgages in general, unless you're putting down 20%, there's this thing called mortgage insurance. And I know FHA is different than conventional, but does FHA mortgage insurance stay on that loan forever?
Yeah.
Does it ever drop? And what about conventional mortgage insurance?
So great question. And this is when we meet with our clients, we tell them that, let us help you put your puzzle together. Give us all the pieces, because the answer for Brian is not going to be the same answer for Jane or Seth. There's so many different products, and we want to help put them in the loan that's going to make sense for them, for their family, their disposition, and their long-term goals. So FHA, like I said, it has mortgage insurance that never goes away. So you can put down 3.5%, but you're going to pay mortgage insurance until that loan is paid off in full. Conventional, if you use the 3% down conventional, you would have mortgage insurance, but once you got to 20% equity with the market appreciation and principal reduction, that PMI would go away. Okay. It cancels. So that's one of the pros and cons versus those two programs. But the good news with that is that you don't have to have 20% to put down. So if you don't have 20%, a lot of people think they never raise their hand and say, can I do this? Yes, you can, and there's tons of options. So I don't want people to get scared of mortgage insurance, because it's literally a vehicle that allows somebody that doesn't have 20% to possibly own a home. And we all know how high rent is right now, so owning a home is definitely the best way to go.
Okay, yeah, that's great. I'm glad you cleared that up. So, but Stephen, I appreciate you stopping in today and sharing your knowledge. And how can people get a hold of you if they need your help?
Yeah, well, right here in Harrisburg, we'll take clients by appointment. You can call us at 704-455-8955. If you are interested in applying, you can go to www.thenorgroup.com. See it on my shirt and hat here. And the application is right there. Like I said, it's secure, it's free, it takes you about 10 minutes. And if you have the goals or the desire to own a home, that is definitely the first step.
Awesome. Thanks guys for tuning in. And to learn more about the entire home buying process, get a copy of my free book called Buying Your Dream Home, and the link is in the description below. And make sure to subscribe to the channel and click the bell to be notified when we release new videos every week. Make it a great day.